This program is brought to you by First National Bank of Botswana.
FNB, how can we help you?
When running a business means
Where did I put that receipt?
we can help you with instant accounting, free software that does your bookkeeping for you. When running a business means
Wait, what do you mean the container hasn't arrived?
we help protect your business from risk with Mohwebi Insurance. And when it means
How do we pay our staff that don't have bank accounts?
we help you make multiple payments directly to people's phones with e-wallet bulk send. At FNB, we're constantly innovating to help business owners at every stage of their journey.
Over the last 2 decades, world trade and production have become increasingly organized around global value chains. Now, according to the World Bank, countries can benefit from participation in global value chains in multiple channels. Before globalization came full swing, countries used to make products primarily in one country. Today, a single finished product often results from manufacturing and assembly in multiple countries, with each step of the process adding value to the end product. Global value chains create a platform on which the costs of production and end profit and goods are shared accordingly amongst varying participants. This has resulted in more than just a finished product. There's an exchange of expertise and a sense of togetherness brought on by making things together as a team. In the end, how much countries engage with global value chains determines how much they benefit from them. The new evidence on global value chain participation in the Southern African region suggests that South Africa is a key driver of the region's value chains, both as a supplier and as a destination market for exports. But now, while South Africa is making its integration into the global value chain felt, what has been happening in our very own country, Botswana? Botswana Investment and Trade Center CEO Kelotsusitse Olibile speaks to us about what exactly these global value chains are, as well as how far into the global market Botswana has reached in efforts to integrate herself in the global value chains.
I think before we put the word global, let's understand what a value chain is. A value chain is basically the totality of activities that firms and people will put in place to facilitate a product, or could be a service, from its inception, its conception, to its very final consumptive state. In other words, and by example, if we're talking about a vehicle, all the integrated set of activities and processes around conceiving the vehicle in planning, facilitating it, producing all its components, all the way to a vehicle in the showroom that you can then buy and drive.
How far into these value chains do we go?
It's something that we drive. First of all, when you look at Botswana, as a market, we are very small. We're talking about 2 million people. So anything that we attract people to come and produce in Botswana has to be with the aim of addressing some need in the global markets, because somebody cannot be fully attracted by just the 2 million people. But you are asking me, how far has Botswana embedded? I think you can take it around sectors. Take a sector like auto components manufacturing, where 50% of the wiring harnesses that are consumed by the South African auto industry are actually made in Botswana. But we also talk about other enablers for that industry, like the batteries and things like that. You can take probably the textile industry. Historically, it's been quite enabled by the AGOA market, but obviously there comes issues of competitiveness, and I think over the years we dwindled down. But the other ways that Botswana wants to be integrated in the global value chains is by signing what we call bilateral, multilateral trade agreements. These are enablers, because when you attract people to come and produce here, you are telling them, look, you are as good as being in the US, because We are a beneficiary under AGOA as an example. You can produce in Botswana and still be able to comparatively sell your product in such a huge market. So we have a number of these agreements in place. We are members of the SADC Trade Protocol. We are members of the trading bloc SACU. We've now just signed the Continental Free Trade Agreement. So all these will really be enabling our various sectors to quite effectively embed into the global value chains.
With so many markets to try to penetrate, so many agreements to some hurdles, perhaps we could speak to those. What challenges have been there in trying to go into the global markets?
I think the key theme, particularly where we stand at Botswana Investment and Trade Center, has been competitiveness. Sometimes you'll hear that, you know, the location of Botswana really places us quite high in terms of issues like transportation. And then you find that while we also have a number of these agreements in place, there are certain instances where countries will put in place what you call non-tariff barriers, some inconveniences, probably at the border or with their policies and administration systems, that make it quite ineffective for a product that comes from Botswana to actively penetrate that market. So I think talking solutions would always be on the lookout of, as we attract people to produce here, how do we facilitate them to be competitive? And I think for us to achieve that, the issue of incentives is quite a contentious one. So there are some who argue that you know, incentives are no longer relevant. But the surprising thing is that even countries that are regarded as the most competitive in the world, your Singapores and others, they still offer incentives. So the only substitute for incentives becomes perfect competitiveness. And therefore, that's one area that we need to look at in enabling people to actively produce and sell to the global markets.
Long term, how do you plan on sustainably pushing the envelope in this regard, integrating Botswana into the global markets?
I think for us really is to accelerate driving our mandate of attracting able investors to come and produce in Botswana and create, you know, economic opportunities and economic value. But as I was saying in the last answer, for them to be attracted to Botswana, they need to be able to sell and embed into the global value chains in quite an enabled manner. So that is why I think our offering as a country needs to be continuously looked at, so that then Botswana, people find Botswana to be quite attractive. And we are quite happy with the work that is ongoing. You know that the transformation team is hard at work. In fact, I was speaking to some of them in the morning in terms of how we can enable each other. And we believe with those compelling strategies that we bring forward, they would only aim at making us globally competitive.
When running a business means
Where did I put that receipt?
we can help you with instant accounting, free software that does your bookkeeping for you. When running a business means
Wait, what do you mean the container hasn't arrived?
we help protect your business from risk with Mohwebi Insurance. And when it means
How do we pay our staff that don't have bank accounts?
we help you make multiple payments directly to people's phones with e-wallet bulk send. At FNB, we're constantly innovating to help business owners at every stage of their journey.
Welcome to First Issues. Today on our segment, we speak about property financing, which is usually known or referred to as a mortgage. A mortgage is often referred to as a home loan when used to purchase a home. The borrower enters into an agreement with the lender, usually a bank, then makes payments over a set time span until the lender is paid back in full, usually with interest. In such agreements, there are various terms used to differentiate the types of transactions that take place within this process of borrowing money against property. One such term is remortgaging, otherwise known as refinancing. What is remortgaging and how does it differ from a mortgage? Bank mortgage specialist Khomotso Thakadu shed some light on an otherwise confusing discussion, detailing other terms like releasing equity and the reasons one could consider to remortgage their property.
Basically, remortgaging, this is where possibly you would have an existing property that you would love to refinance. Normally, people use the word refinance. Or you've got an existing mortgage, then you want to do refinance on that existing mortgage. Mortgage simple means or refers to where you are getting funding to buy a property. This funding comes through a finance through a bank or any financial institution that is into funding for property.
Maybe you could further explain it when you're saying you'll be refinancing, you'll be remortgaging on a property. When you are getting remortgaging for that particular property that you've already mortgaged, what does it mean? Why would one be considering to get more financing for an already existing entity?
One would consider refinancing, maybe start with one example, where you are having a property which is not financed or which does not have debt. Or what you say is not encumbered. So the customer would prefer to refinance as a way probably to get equity coming from the house. That's one, because the reason why people refinance is that they want to release money or use money coming, the value that is sitting with the house, then they want to use that. Two, one would want to refinance as a way to try and maybe reduce their financial stress. Where probably the mortgage installment at the time when they were taking the mortgage, it was a little bit high. They've paid for some time. Now they do a refinancing where to give them an opportunity to reduce the installment based on the remaining balance, on the mortgage, and hoping obviously for getting better terms, over a longer period and lower interest rates.
Can an example of remortgaging or getting refinancing be to, say, for example, to renovate your house? Maybe to buy another house using your existing house as equity, like you were saying?
The appropriate response to that is when you remortgage or when you refinance, there has to be a clear plan on the reasons of why you refinance. Okay. Because refinancing is basically increasing your debt. You are bringing debt into, into your space. So you need to have a plan on how you are going to acquire this debt and how you are going to pay it off. So yeah, one could refinance to renovate the house. That will improve the value of their property. One could refinance to raise capital, for investment. They want to invest into anything that they are interested on. But the point remains, how do you intend to pay back the refinanced amount? Because then that plan has to accommodate the tenor in which you plan to pay back, and then your investment levels. If you're refinancing for investment, how much are you going to get from that? So your plan has to be very, convincing to yourself to say, I'm refinancing and this is how I'm going to get value out of my property.
When running a business means
Where did I put that receipt?
we can help you with instant accounting, free software that does your bookkeeping for you. When running a business means
Wait, what do you mean the container hasn't arrived?
we help protect your business from risk with Mohwebi Insurance. And when it means
How do we pay our staff that don't have bank accounts?
we help you make multiple payments directly to people's phones with e-wallet bulk send. At FNB, we're constantly innovating to help business owners at every stage of their journey.
Welcome back to the program. Most of us work very hard to achieve certain goals in our lives. For some people, this may include living in a certain neighborhood in a beautiful home with family. They buy the latest TV sets, furnished with the latest luxury designer couches, complemented by only the latest finishes and expensive collector item art pieces all around the house and other expensive items. All of these were cultivated on the blood, sweat and tears of individuals who had a dream. But in a blink of an eye, a freak fire accident engulfs all of these belongings valued in the millions in a blazing inferno, leaving behind nothing but incineration ashes of what used to be your most prized possessions. What now? What are your options? Can you still live in your beautiful home with all its beautiful finishes? As we explore various forms of insurance, we have come across home insurance, which by definition is financial protection in the event of a disaster or accident involving your home, offered to you by your financier, be it a bank or other financial services providers. Even with the previously mentioned scenario being known all too well, the uptake of insurance, especially home insurance, is quite low, in spite of the risk being immeasurably high. Rationally, this should not be happening, so why is it a growing trend? Our guest is insurance expert Mosading Musini, who afforded us the opportunity of demystifying the various misunderstandings regarding home insurance. She tells us how one can get home insurance cover for their home and when one can claim from this cover and exactly what makes the claim eligible and also what sort of disasters are covered.
Home insurance is simply put insurance for the home, for a residential property. So home insurance would typically cover the structure that you use as a home and the contents therein. So home insurance typically goes on to even cover the liability or the legal liability that comes out of that property. So for example, maybe if your dog was to bite a neighbor or a passerby or a visitor in your home, such insurance would take care of it. This insurance is actually one of the richest insurances that we have locally. What it covers really is acts of God. So the reason why others would call it fire, because it's a policy that will respond or will cover you if you have a fire. If your building or your house is burnt down, it would rebuild your home if you insure at the right levels. So it will also include professional fees. If you need an architect to come and look at redoing your house, all of those will be included in this cover.
When you're getting your home financing or your mortgage, does your financier or your banker force you, or is it mandatory for you to get a homeowner's insurance?
Lenders would say, I need this insurance or I need that insurance. But they also say to you, you can go and arrange a similar cover to the one that I'm going to give you. So there's always an option, because it's a regulator that we need to give our customers options. We don't want to force them. Most lenders would not want to force them to take their insurance because it's against the law. The covers that we have in Botswana, most of insurers would cover natural disasters. Natural disasters are things like rain, storm damage, things like that. So those things in the local context are covered. So, and I know that a lot of people get confused because we look at the news and we see in the US, they say you had an earthquake, therefore these people didn't have cover and they're not covered. But our cover, fortunately, would cover such things. So, storm damage, lightning, tremors. Recently, we've had a few earth tremors in Botswana. So, if your house was damaged because of an earth tremor, in the current setting, it will be covered. But I want to caution people and say that it's important to understand what you are buying and what you are covered for. So, reading your policy wording or your insurance contract is a very critical thing. So, when people sell you this cover, you need to ask all the questions. What am I getting? What am I buying? And then when you get the document, you need to go through it. If you've got questions, you need to go back and say, you know what, this is not what I thought I was buying, or I want it this way, or please make me understand what this means. So it's very important to understand what you are covered for.
Homeowners insurance cover seems to be quite a necessity, but in our research we found out that the uptake is quite low, even though the risk of not having it is quite high. Why is that?
I think it is lack of education because, or let me say lack of awareness, because homeowners insurance is one of the cheapest covers actually you can get. It's very affordable. So, and the important thing to note is that you don't need it just because your house is bonded. So imagine a situation where you have a house in the village. Most Botswana we have the townhouse and the village house. Yeah. So you have a house at the village and it's not insured, and maybe you are retired and it burns down. Therefore, you don't have without insurance, you don't have the money to replace it. So really, because it's such an affordable cover, I encourage anybody who has property to actually look into taking this cover, you know, and protect yourself, because it's all about protecting your wealth. It's all about protecting your property.
This program was brought to you by First National Bank of Botswana.
FNB, how can we help you?